So in this video, I'm going to share with you my stocks that I'm going to be watching for 2026. 2025 has been an amazing year. Very happy with the results. So of course, I want to make sure I'll continue that trend for the next year. And while these are a handful of stocks, of course, I'm looking at many other stocks as well, because those kind of give you an indication of where the market is heading towards. So you don't want to just look at 5-6 stocks. You want to look at the entire market, different industries, to get a better idea as an investor of where the market is heading. And of course, as always, it's not a buying recommendation and not financial advice. Now, in case you haven't been watching my monthly portfolio updates, this is what I already have in my portfolio. Of course, I'm going to keep on watching them, right? The two indices that I have, S&P 500 and NASDAQ 100, as well as Bitcoin, Amazon, Alphabet, and actually recently I added one more, which is Emaar. I come to this a little bit later on as well. So some of them I will keep watching and I'll mention them in this video as well. But that's of course the ones that I already have, which naturally continue to be also on my watch list. Now, before we dive into the individual stocks, a little mention of the criteria of stocks that I'm looking for, right? Usually I want to invest in large cap companies, meaning they have a big market capitalization. As a reminder, market capitalization is basically the number of shares times the share price, which gives you, as you can see over here, the market cap. And that shows you how valuable a company is. So right now, the most valuable company in the world is currently Nvidia, followed by Apple, and then Alphabet and the rest over here. So, usually I like to have bigger ones, right? Because you can also invest in very small ones, less than 5 billion, for example, but those are very, very volatile. And I like to have more predictability and a proven business model that is already established. Yes, you could say that potentially the upside is a little bit less, but for me, I value stability and growth with a potential upside and a very much protected downside. And so I like them to be already a top leader in their respective industries, right? That's for me very important. They should be diversified. I really like when a company is diversified across different sectors, not just one single sector. That's usually something I really enjoy. For example, like we have with companies, Google, Amazon, very much diversified, right? It's not only AI. They have so many other avenues that they can monetize and capitalize on. Total returns for me are always important over dividend yield. Dividend yield is nice to get that sweet passive income, but ultimately I look into total returns over time. They are more important for me than just the dividend. And of course, a clear growth trajectory. Just because a company did well historically, but the future outlook is not strong, for example, a tobacco company, for me, it's just not exciting to invest in for the coming years because I'm a long-term investor. And of course, there are many industries I avoid. A couple of them I mentioned over here, automotive, for example. I think it's such a competitive industry. Margins are being squeezed so much with now the Chinese entrants coming over there, pushing prices down. It's just so unpredictable, right? One year we're going into EV, then now in Europe, they seem to be going back to, petrol engines again. So it's just so unpredictable, highly regulated, and not something I want to get involved in. The same with pharma, right? You have some really strong pharma companies that from the outside I really like and would like to invest in, and I did in the past. But now, having done that in the past, I also realized how strongly they depend on regulation, on medicine approval, on the pipeline. And it's just so difficult for me to plan and foresee, right? There's a lot of hope baked in that things go through, that the clinical studies get approved. And for me, it's just too much of a risk, too unpredictable. And that's why I'm staying away from pharma. I'm sure you can make money with it, definitely, but it's just not for me. And you have to find what works for you. Same as I mentioned before, high dividend plays, right? Like tobacco companies, even some REITs, real estate investment trusts, they pay a high dividend. Often the total return is unfortunately lagging quite a bit. And lastly, entertainment like Netflix and so on. They're great companies, but for me, they're just too narrowly focused on one single industry, which is entertainment. And again, there's so many different niches competing for attention of users. Even what you're watching right now, YouTube, right? A big competitor to Netflix, but YouTube being part of Google, again, they have many other businesses, right? And here we have the full watch list of the 12 companies that I'm actually keeping an eye on for the coming year. In fact, it's actually 4 sectors, 12 different stocks across big banks, big tech, fintech and brokers, and UAE locals, which is actually something I recently added and started exploring to my portfolio. As in the past, I was only focused on the US. All my holdings are US based, even my ETFs. Now you could say that Bitcoin is a global currency, but the rest is all US based. But now actually I started adding my first UAE stock, and I might potentially add another one in the future. Right, and before I jump into each of them, a quick shout out to Seeking Alpha, which is actually my favorite stock research platform of choice. I've been using them for a number of years, and they, as every year, come out with their top stocks for 2026. In the beginning of January, all Seeking Alpha subscribers, doesn't matter which plan you're on, you will get access to that amazing webinar where one of their smartest analysts, Stephen Kress over here, this gentleman, comes up with his top stocks for 2026. And while I was happy with my results in the past, look at his performance, absolutely remarkable of how his stocks increased since he did them. They started that back in 2023. So if you would have bought all those stocks and held on to them, it would have increased by 184%. In 2024, up 324%. And even for this year, up 50%. Absolutely outperforming the S&P 500. Now, of course, it's not a guarantee that this will happen again for 2026, but his 3-year track record is definitely really strong. And the cool thing is, basically any Seeking Alpha subscriber can get access to that event. And with my link down in the description below, depending which plan you want to go for, you will also get a discount. And on some of the plans, even a free trial, so you can try it out if you like it or not. And that way, once you subscribe, very easily you can go over here on Top Stocks, just click on it and click on sign up. And you'll be in for that webinar and you're not going to miss out on anything. And I will definitely be joining it because anyways, I already use Seeking Alpha, and giving his strong performance of the picks he did in the past, for me is definitely very attractive. And I want to see what he has to say for the coming year. So definitely check it out. And with my links in the description down below, you get a very sweet discount. Right, so starting off with the banks. And that might surprise some of you. In general, I haven't been really investing into banks in the past. I tried dabbling around a little bit for a while when I was really into dividend investing. But now, honestly, in recent times, I realize it's definitely an industry I'm not really excited about, but there's no denying it has done extremely well in recent times. 2025 has been an exceptional year for banks. You can see over here, it really outperformed overall banks, the S&P even by 13% year to date. And going forward, unless we're going to have a major recession, I think they're still going to continue to do really well, right? We have still ongoing IPO pipeline, right? We have potentially SpaceX coming next year, or OpenAI with ChatGPT, right? So major IPOs. JP Morgan is actually the largest US bank and probably one of the largest one in the world. And then we have 2 investment banking companies with Morgan Stanley and Goldman Sachs. I like both of them. So for me, it's a little bit hard to kind of decide which one I would be investing in. If I would have to go with one right now, where I know it's going to be stable going forward, it would probably have to be JP Morgan. I mean, jumping over here on Seeking Alpha, you can see currently the market capitalization is just shy of 1 trillion. Short interest is very low, but they do pay also a nice dividend, 1.82%, so definitely more attractive than the S&P. And overall, you can see also here the ratings. Seeking Alpha Analyst give it a buy, Wall Street and the quant rating gives it a hold right now. And I do like their revenue trajectory. You can see that, consistently growing it over time. While on the other hand, you have Morgan Stanley, where the market cap is significantly less, only 288 billion, but they do pay a 2.2% dividend. So if you like dividends, it could be an interesting play as well. And when I compare it in terms of total returns versus the S&P 500 over a 5-year period, more than twice the performance of the S&P. You can see that over here, S&P over 5 years, including dividends, only returned 101%, while Morgan Stanley returned 212%. And Goldman Sachs over here as well, very similar market cap, 285 billion, slightly lower yield of 1.76%, and an even more impressive returns over 5 years of 300%, pretty much exactly 3 times the amount of the S&P 500 during the same period. So right now, I haven't pulled the trigger on any of them, but I'm definitely going to be watching them. I think it's also a good indication whether they continue to do well. I think it's an indicator the economy is continuing to do well, and we start seeing drops in any of them. Others are quite likely to follow accordingly. It's also interesting to see which ones of those will be winning the contract, for example, to do the IPO for SpaceX, which is quite likely to happen eventually. The same with OpenAI, who is behind ChatGPT. So whoever does end up with them obviously will also further benefit. Now moving on to big tech, of course, that's something I'm always very excited about. Whether you like it or not, the future is going to be AI, and tech, I think, is not going to go anywhere. It might have little dips here and there. I just can't see a world where any of those companies are going to be completely disappearing within the next 5 years. And of course, they continue to invest tremendous amounts. You can see until 2030, they might be investing 3 to 4 trillion into the further build out of data centers, cloud infrastructure, all geared to further boost AI usage and capability. So just incredible. It doesn't look to slow down anytime soon. Some people talk about AI bubble. Again, maybe it's a bubble, maybe not. And if it bursts, it bursts. But long term, one way or the other, it will rebuild itself. And I'm really bullish on this. We've seen this with Amazon in the past, right? I believe it dropped by almost 90% in the .com bubble. Well, if you held on to it, it came back absolutely roaring since then. So even if we were to be in the bubble and there's a little reset, that's fine with me. I'll just buy the same stocks at a lower price and hold onto it long term, and you should be good, right? But that's, again, my personal conviction in it, right? I'm fine with volatility, but that's something to look out for. Of course, a lot of opportunities. I really like those hyperscalers. We talk about Microsoft, Amazon, and of course Google. They invest tremendous amounts into CapEx, capital expenditure, to build out those infrastructures. And of course, as we said, Nvidia, being the most valued company in the world, is really something that all of us should be watching one way or the other. Even if you're not investing in Nvidia directly, which I'm not, it will have an impact on your results. If you invest into the S&P 500 or even an all-world ETF, including the US, your results will very much depend on Nvidia's performance. Because even if you diversify in an all-world ETF, Nvidia will have a significant weighting in your portfolio. So it is a very important company to watch. And the expected revenue growth targets for next year are almost 48%, absolutely mind-boggling numbers. And you might say, how much further can it go, right? If it's already at 4.5 trillion market cap, right? Can it go to 10 in one day? Well, yeah, why not, right? If enough people believe in it and it adds value and it's so important, well, then why not? Why it has to stop at 4.5, right? So there's no reason for it to not continue growing. If you see the rating summary over here, really strong ratings actually. Seeking Alpha Analyst, give it a buy. Wall Street, give it a strong buy. And the quant ratings for now are a little bit more cautious. You can see that over here, the breakdown. But actually only in terms of valuation. The rest, you see the growth, profitability, all gets very strong valuations over there. It's just the valuation right now in terms of PE ratio. Yes, of course, it's on the higher side with 40. But that's all relative, right? It's also the most valuable company in the world. It's absolutely indispensable company, right? Pretty much all the big AI companies are relying on Nvidia. So naturally, the valuation is what it is, right? So I'm not really too bothered anymore purely on the PE ratio or other valuation metrics. Ultimately is how strong is the pipeline and how much of a moat the company has. And for now, Nvidia is definitely the backbone of AI. Of course, there are some concerns, right? We have geopolitical tension with Taiwan and China. So that's something to watch, right? If that worsens in the future, hopefully it won't, but if it did, it will definitely be impacting Nvidia, right? Because pretty much most of their chips are ultimately manufactured in Taiwan, even though slowly manufacturing is shifting also to US and other places, but it's still pretty much majority of it coming from there. And on the other hand, you now have also companies like Alphabet and Amazon manufacturing their own chips, right? So that's starting to be competition from them as well. But ultimately for me, Nvidia is almost like a thermometer where I can measure the temperature of the market, of the AI industry overall. It really leads the pack, right? It's the same like Bitcoin for the crypto industry, right? If Bitcoin is doing well, we know crypto is doing well. Then of course we have Google and Amazon, two companies I already own. I'm super bullish on them. They're really well diversified. I mean, Google year to date has been absolutely smashing it, up 65%, just mind-boggling numbers, while Amazon is up only 6%, so significantly less. And I still think it's going to have its Google moment either next year or the following year, but eventually it's going to break out. You can see the ratings over here, all of them very much in the green, and I'm really, really bullish on it. Yes, this year I didn't really see major gains from my Amazon holdings, but I'm really happy about this because I can build up a bigger position in Amazon. And eventually, once the stock price does take off, I'll be capitalizing on that. Same with Apple. Right now, I'm not really bullish on Apple at all. Actually, I think they really missed the boat in terms of AI. But the fact they're still the second most valuable company, despite all the lack of innovation in recent times, actually gives me hope that if they eventually were to get AI right, they can really drive the share price even further. So again, not a company I'm actively looking to invest in anytime soon, but for sure a company I want to be watching because I think this could be quite an interesting company, the dark horse, so to say, in AI, and might surprise us with some nice gains. Then we have some fintech and broker companies. Obviously, I'm very excited about stock brokers. I use them myself. I review them for a living. So for me, it is definitely interesting to look at, especially Robinhood. It's a company I'm really sad about that I didn't invest earlier. I had them on my radar when they were back this year at around $40. And now you can see over here the price tag of $120, up 223% for the year. Absolutely incredible numbers. Yet the market cap is only 100 billion. So technically still a lot of room to grow until they reach one day maybe 1 trillion. And their ambition is to be the global, banking broker app of choice for pretty much global citizens. And they're really starting to expand globally, not only in the US anymore. So that could be interesting. I just find it right now a little bit too highly valued for me. 60 PE ratio for what it is. For me, it's a little bit on the higher side, but there's no denying they've done a great job and most likely will continue to grow going forward. But then I also look at two brokers that I personally use myself. And ETORO was only listed a few months ago, so they had a little bit of a rocky start. As you can see over here, down over 6 months, 43%. So still a company I keep an eye on, right? Because I want to see how the financials are doing. And I'm actually happy that my stockbroker is publicly listed so I can follow their numbers and see what is happening and just adds extra scrutiny on the company as well, right? So I know my money is in safe hands because obviously more eyes are looking into the companies, analysts writing about them, so they can't do anything dodgy. So I feel much more safer with my money than some non-stock listed company, maybe based in Seychelles or any other exotic island. Here, you're definitely going to be in safe hands, even though so far the stock price hasn't done particularly well. On the other hand, Interactive Brokers, another one of my stockbrokers of choice, has actually done exceptionally well. And you can see over here, even in terms of quant ratings, they really give it pretty much plus for everything except for the valuations, the P ratio a little bit high. But other than that, the market cap just slightly higher than that of Robinhood, even though the total holdings are significantly higher, arguably the biggest stockbroker in the world. But you can see it, the total returns over a 5-year period, even outperforming some of the previous investment companies that I mentioned, 344% versus the S&P 500 over the same period, up only 101%. So really incredible results actually from Interactive Brokers. So that's actually a company I might be considering investing in the future. And last, we moved to UAE local companies, which I kind of forgot about in the past, never really considered, right? Even though I bought real estate in Dubai, where I live right now, I never considered buying the company who's actually behind that real estate. And that's actually Emaar, the biggest development company here in the UAE and even in the region is starting to continue to grow. They have done so very well. They're behind the tallest building in the world, the Burj Khalifa, the biggest mall in the world, the Dubai Mall, and many other incredible projects. I actually right now live in a building built by Emaar. So really a strong company. And anyone who lives in the UAE or has ever been here would know about that company. And if I jump over into my eToro account, you can see since I've been listed on eToro, where I actually buy my UAE companies, because unfortunately not all stockbrokers are supporting UAE companies yet, even though I think it's really a thriving market and hopefully more stockbrokers in the future are supporting that. You can currently buy it, what I found, on Interactive Brokers and eToro. I choose eToro for that. And yeah, it started listing with them in August 24. So over a 1.5 year period, up 72%. Absolutely incredible performance. And they currently pay around a 7% dividend, which is also incredible. They pay it once a year. So really exciting there as well. And Salik is a real monopoly. Yes, it's not diversified as such, but they are a monopoly, especially in Dubai. Basically, every time you use some of their major roads, you will pay Salik. It's like a toll system, an operator. Now they're also looking into parking and other areas. So, whether you like it or not, you're going to be, if you're living in Dubai, supporting that company. You pay pretty much on a daily basis if you commute regularly. And that's how the company grows profit. So it's not really exciting company, but a very safe company because over time, the price is only going to go up. And with the population growth, more people are driving, using the toll, and that will in turn increase the revenue. So they have done also tremendously well over time. So if you're bullish on the future of the UAE, Dubai in particular, I think that's a very interesting company to look at. And I think it will continue to do well. It's not going to 10x overnight, right? But I think it's going to be a very consistent growing company that also pays you a nice dividend. So while I'm generally bullish for 2026, of course, there are a lot of scenarios that could go wrong, right? We could see major corrections. Some of the bank CEOs are looking for a 10 to 20% correction in the markets, right? AI stocks are really priced to perfection. Many say the bubble is brewing and growing, as some say. Again, maybe it happens, maybe it will burst, maybe not. Nobody knows. We have the geopolitical tensions going on in China and also other parts of the world, of course. And of course, interest rates uncertainty will also affect valuation on top of ongoing regulation from US and other countries. So a lot of factors that could shape the direction of stocks and markets overall. So again, this is just my watch list. It's not a buying recommendation and not all of the companies I presented to you I'll be actively buying. I'll just keep an eye on it. And of course, as part of my monthly portfolio updates, I will keep you updated which companies I will actively buying if I make that decision. And again, as a reminder, if you want to learn from real professionals and their exact stock picks for 2026, then I really recommend you sign up on any of the Seeking Alpha plans that they do offer, for which you can get a nice discount with my links in the description down below. And you can be joining the Top Stocks 2026 event on the 6th of January 2026. It's going to be around a 90-minute webinar. And well, the results speak for themselves, as you can see from his historic stock picks, which really turned out extremely well. So I'll be sure to dial in and maybe see you on that call as well. But I'm interested to hear from you. Let me know in the comments down below which stocks you're going to be watching and potentially buying in 2026. Let me know. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy. See you in the next one. Ciao.